So Bitcoin has bounced up 16.91% in the last 24 to 36 hours or so, right? We've seen a significant run here for BTC, but is it enough to get recovery, and is it enough for us to get a chance of rallying higher than the 200-day exponential moving average? Well, in today's video, I'm going to be sharing my thoughts on the current market breakdown for Bitcoin and, of course, the wider crypto market, showing why I believe that things are not as bad as they seem. So we should stop panicking and we should start dollar cost averaging, building out those positions if we are not doing so already, and we should definitely be rethinking selling off all our cryptocurrency assets, in my humble opinion. Let me break down why. But before I do, make sure you smash that like button and subscribe if you are new to the channel. So let's go ahead and take a look at Bitcoin here. So we have BTC paired up with USDT on the 1-day Binance chart. We hit $49,000 to the penny on the 5th of August. From there, we have rallied up a fair chunk, taking it from $49,000 up to the peak of today being 55,557, and yesterday we saw, we saw $57,287, 16.91%, right? So we've seen a pretty significant run to the upside, and I don't think we're necessarily finished just yet. Now, obviously here you can see we have this idea of a big collapse in the market. This already has exceeded its original expectations. We should not have gone down to $49,000 on this move, not without, of course, seeing an additional drop, potentially targeting a little bit lower. It doesn't have to, and I'm going to explain what I mean by that in just a second. So with $49,000 being a very key price point, it's important that we acknowledge that there were billions of dollars wiped out due to this event. This wasn't just because people were panic selling and all that kind of stuff. It's because there was a huge pool of liquidity sat down in this area. In fact, we've been talking about it and discussing it with our members down in our Discord server for approximately 2 to 3 months. This pool of liquidity sitting at these key areas at $49,000, in fact, just a fraction lower as well, was getting bigger and bigger and bigger. And so there was this growing concern that the market makers, the exchanges, the market manipulators that are the Bitcoin whales, could see that this was a huge opportunity to grab a huge amount of liquidity out of the market. And we've seen a reason kind of pinned as to kind of what's caused it. To be honest with you, seems a little bit irregular that an interest rate hike in Japan and can have such a ripple effect across the entire industry and, of course, the global stock market. But we have seen just that, and we've seen a real legitimate reason for that liquidity to be extracted from the market. So $49,000, that move to the downside was deeper than many expectations on the time scale of which we've seen. Okay, we were not targeting out that drop before we had a bounce to the upside. And the reason for that is it exceeds the typical structures that you would expect a drop to go to. We would normally expect this range between the 1 and 1.236, essentially 50,366 to 53,628. Anything lower than a 1.236 basically takes you down towards 1.382. And although we haven't exceeded 1.382, it's important to note that that does change the typical kind of retracement structures that you would expect. That means that this is not to be seen as a ABC structure, but instead we can look at it now more as a W, X, Y, X, Z structure. And so this X wave might be very aggressive to the upside, the Z wave might come down a little bit deeper, and so forth. So we want to be aware that there's this possibility here. But I also want to stress that just because we've had this extreme push to the downside and that liquidity was extracted from the market is also no guarantee that it's actually adhering to the standard practices of Elliott wave theory. And the reason and the rationale behind that is that Elliott wave theory tracks retail investors. But this particular move, in my opinion, wasn't driven from the typical retail investor. It was driven more from an institutional element. So we want to be aware that although Elliott wave theory tells us we could potentially be expecting that next move to the downside, I wouldn't be surprised if actually we see a little retracement and then a fantastic surge, because more liquidity is starting to stack up in this higher range due to a lot of people believing that the bull market is over. I am not one of those individuals though. Now, I went through this many times already, and I'm going to go through it just again for everyone on today's video who may have missed it. But here we have, on a weekly time frame, Bitcoin's history. This is USD BTC on Bitstamp, 1 week time frame. I went through this video to basically show you what happens on the election years, but also you have these green lines coming down the chart. These are the Bitcoin halving events. Now, the Bitcoin halving event happens to coincide with every single election year. Okay, we can argue that's just coincidence. That's fine. But I do want to stress here is that a lot of people believe that the Bitcoin halving events cause bull markets. And I want to kind of counter that to say maybe it's actually the US election that is the catalyst to the bullish market. And it just so happens to coincide that that is where the Bitcoin halving event happens. Now, every single time we've had an election in the US, 1 year after, and I say every single time, 1 year after the US election, we have a bull market peak. Here you have the 2013 peak. Over here, 1 year on, we have the 2017 peak. Over a little bit further, in 2021, election year was 2020, we see a peak. So where are we sat right now? Well, we are in the election year. And next year, 2025, if history repeats itself, will be a bull market peak. Okay, now you can all speculate as to where that price is going to be. Is it going to be 100,000? Is it going to be 200,000? You know, we can speculate until the cows come home about that one. But what we do know is here in the election year, we always see volatility. Here, so far, we've seen a little bit of volatility for Bitcoin in 2024. In 2020, we can see more volatility. We saw a big crash before the election, and that's kind of exactly what we're seeing right now. Okay, obviously, pandemic was a main driver behind that. Okay, if we go over into the election year of 2016, what do we see? Well, we can see another crash. Okay, it happens to coincide also with the Bitcoin halving event. And what about the very first one we have here? Going all the way back to 2012, we can see a couple of crashes in that election year. So it doesn't look to me like history is doing anything different than what we have seen time and time again. Okay, let's go back to our USDT pairing chart. Okay, so on our weekly time frame here, yes, we've had a big crash to the downside. This is a previous area of resistance come support, and that's exactly what's holding now at 49,000. And yeah, we have the idea of a bull market in 2025 peaking somewhere in that range between 100 and potentially $135,000. Now, obviously, I've gone through this many times. We've seen a great run to the upside. We've seen many a correction on this journey. It hasn't been straight lines. We've seen it time and time again. Now, what we have here, in my opinion, is a fantastic setup. I'm going to show you why. Okay, so as we have had many times before, lower highs and lower lows. I've gone through this actually a fair chunk of the time, actually. Back in 2022 and 2023, we have seen time and time again these lower highs and lower lows, and we see them all over the place. And every single time you have this, you have a breakout event. Okay, and you can see I'm going to remove the lows. So I'm just going to draw the highs in to keep this nice and simple for you guys. So here you can see, okay, yes, we might have some more volatility to the downside, right? But we always have these big breakouts on every single one of them. Okay, now, as we can see, if we come over to the previous bull market, okay, we can also see just over here where we have this correction before we get into that next bull run highs. Okay, this is 2019 and obviously the 2020 pandemic. Okay, we can also see that there are many corrections on that journey to the upside as well. If we come on over a little bit further, you can see again, time and time again, we have lower highs and we eventually have those breaks to the upside. So is this any different than what we have seen in any of these previous moves? No. And the reason that is we can see inside all of these structures an overlapping candlestick nature. Yes, we finally had that little push to the downside before we rallied to the upside, but you got there, okay? And it's because you have all of this overlapping candlesticks, all of that is overlapping candlesticks. Here you can see overlapping candlesticks, final push to the downside before you rally to the upside. And those little pulls to the downside, this candle here, for example, and this candle here, extracting liquidity, here's even one right there, extracting liquidity out of the market before the run to the upside. Okay, so I'm going to say this looks like history is repeating itself. Not only do we have the overlapping candlesticks and that liquidity grab down here at $48,000, the next big moves to the upside in 2025 should be into some fantastic new all-time highs, where I do think we are likely to see in excess of $100,000. Now, guys, you can let me know what your thoughts are on all of this in the comments down below. Do you agree? Do you disagree? Let me know. And what is your long-term Bitcoin price prediction? Do share. Now, if you found it useful and informative, hit that like button. I do appreciate that. If you are new to the channel, subscribe. And if you haven't done so yet, go ahead and check out my second channel where I cover more technical analysis over there.